Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics. Hope everybody's doing well. It's Wednesday. We're halfway through the week. Wanted to come to you with some updated thoughts in light of the headlines and tweets yesterday. Obviously, by now, we've all seen that the market legged lower late in the day yesterday following a tweet from President Trump talking about calling off the fiscal stimulus talks until after the election. Now, our view has been and remains that stimulus is a matter of when and not if. And our base case had always been that it would be after the election. We kind of viewed stimulus before the election as a potential upside surprise and nice to have, but we really weren't factoring it all that heavily into our decision-making process. Markets started to factor it in a little bit with the talks between Pelosi and Mnuchin. And that quickly had cold water thrown on it with the tweet yesterday. Interestingly, after the close, President Trump kind of walked back a little bit of that rhetoric, and I think that's why the market's rallying here today. But more interestingly to me is it's actually confirmation that stimulus is the driving factor in our view on the inflation side of the equation. Remember, for the past few months, we've had this stagflation type view, slow or little or no growth in the global economy, combined with inflation that's been a function of the fiscal and monetary stimulus that we've seen globally. And we said for that to continue, we would need to see another round of stimulus. Now, we still think that another round of stimulus is on the table. It seems that it's likely just pushed back maybe to after the election. However, the market tipped its hand yesterday, in my view. You'd notice in yesterday's trading, all of the themes that are leveraged to higher inflation took a turn to the downside. Right, commodity currencies took a turn to the downside. Long bonds actually traded higher. So that tipped the hand and kind of tells me that I'm on the right track here, and that if we're thinking about this stagflationary type theme and an inflationary type environment, it largely hinges on stimulus. All right, so we're going to continue to watch what's going on. More interestingly to me as well, something that I've been writing about for clients has been the fact that we are going to be in a headline and tweet-driven environment. But realistically, if we take a step back and we look at where SPY, the S&P 500 ETF, closed on Thursday, last Thursday, October 1st, and then look at where it closed yesterday, down roughly 1%. Think about that in light of all of the headlines and all of the tweets that we've seen in that time frame. President Trump tests positive for COVID, goes to the hospital, gets out of the hospital, comes in with the tweet yesterday talking about calling off the fiscal stimulus talks. I mean, those are all opportunities in my mind for the market to take a turn to the downside, but that hasn't happened. So to me, that's a slight bullish tilt to the view. But bigger picture, we're still stuck in a range here. SPY 320 to 325 to the downside, 343 to the upside. In between, I see a lot of opportunity for investors to get chopped up. So largely speaking, one of the other things that I went through yesterday in a note to clients is where am I wrong? And where I'm wrong was laid bare yesterday. If I'm wrong on my view here, I think it's going to be wrong on the inflation side, and that largely hinges on stimulus. So if stimulus does not materialize, or if it's not as big as investors are anticipating, then my view on inflation is wrong. I always think it's a good exercise to walk through where you would be wrong and what you would need to see in order to admit you're wrong. So for me to admit that the inflation theme is no longer in play, it would largely be a function of not getting stimulus or getting a smaller stimulus package than investors were anticipating. So that is how I'm looking at things here on a Wednesday. Hope everybody's doing well, and we'll be back to you soon with updated thoughts. Be well, be safe.